Investors breathed a sigh of relief on March 14, 2025. The market staged a remarkable rebound. This followed one of the most volatile weeks in recent memory. The S&P 500 surged 2.1%, reaching 5,638.94. The Dow Jones Industrial Average wasn't far behind, climbing 1.7% to 41,488.19. The tech-heavy Nasdaq Composite outperformed both, soaring 2.6% to close at 17,754.09. Despite the rally, scars from the week's earlier turmoil remained. The Dow still recorded its worst week since March 2023. The S&P 500 even briefly dipped into correction territory, a drop of 10% from its recent peak. This roller coaster ride underscored the uncertainties gripping the market. This day brought a much-needed break from the selling pressure. However, the question on everyone's mind remained, was this a temporary reprieve or the start of a sustained recovery? Looming large over the market's recent volatility was the specter of tariffs. President Trump's aggressive trade policies continued to stoke fears. Investors worried about higher costs. Inflation remained a concern. These factors threatened to delay much-anticipated interest rate cuts by the Federal Reserve. Friday's rally seemed to be driven in part by President Trump's silence on the tariff front. The absence of any new threats provided a brief respite. However, the underlying tensions remained unresolved. The uncertainty surrounding trade policy continued to cast a long shadow over the market. Businesses and investors alike were left in a state of limbo, hesitant to make major moves until the outlook became clearer. The tech sector, hit hard earlier in the week, mounted a comeback. Major players like Nvidia and Tesla led the charge, posting impressive gains. Nvidia's stock surged 5.27%, closing at $121.67. Tesla wasn't far behind, with its share price jumping 3.86% to reach $249.98. Other tech giants also joined the rally. Apple saw its stock rise 1.82% to $213.49, while Microsoft gained 2.58% to close at $388.56. The Magnificent 7 ETF, which tracks the performance of 7 prominent tech companies, climbed 2.6%. This rebound suggested that investors still had faith in the long-term growth potential of the technology sector. However, it remained to be seen whether this renewed optimism could be sustained. Section 4. Banking on stability. Financial sector shows signs of strength. The financial sector, often seen as a bellwether for the broader economy, also showed signs of resilience. Bank stocks, which had been under pressure earlier in the week, rallied strongly. JP Morgan Chase surged 3.22%, Bank of America climbed 3.08%, and Morgan Stanley rose 3.28%. The KBW Bank ETF, a popular index tracking the performance of bank stocks, gained 2.5%. This broad-based rally in the financial sector suggested that investors were becoming more confident about the outlook for economic growth. However, concerns about slowing global growth and the potential impact of trade tensions on lending activity persisted. Section 5. Golden Haven. Safe haven demand drives record highs. Gold, often seen as a safe haven asset, surged to record highs. Driven by a confluence of factors including central bank buying, geopolitical tensions, and fears of inflation, the precious metal breached the $3,000 per ounce mark for the first time ever. The gold continuous contract, a benchmark for the price of gold, settled at $2,993.60, up 0.08% on the day. This surge in gold prices reflected a growing sense of unease among investors. They sought refuge in the perceived safety of hard assets like gold amidst the uncertainties plaguing the global economy. Section 6. Yields on the rise. Inflation concerns fuel Treasury demand. Treasury yields, which move inversely to bond prices, rose as investors reassessed the risks of inflation. The yield on the 10-year Treasury note climbed 0.044 percentage points to 4.317%, while the yield on the 2-year Treasury note rose 0.050 percentage points to 4.030%. This uptick in yields suggested that investors were demanding higher returns on their investments to compensate for the potential erosion of their purchasing power due to inflation. Section 7. Navigating the week ahead. Fed decision and economic data in focus. As the market closed on March 14, 2025, all eyes turned to the week ahead. Several key events were on the horizon, each with the potential to significantly impact market sentiment. The Federal Reserve was scheduled to meet to discuss interest rates. Investors would be eagerly awaiting any signals about the future direction of monetary policy. Strong economic data could bolster the case for a rate hike, while signs of weakness could prompt the Fed to adopt a more dovish stance. Simultaneously, the tech sector was gearing up for a slew of earnings reports. The performance of companies like Apple, Microsoft and Amazon would offer valuable insights into the health of the technology industry and the broader economy. The market's reaction to these events would likely set the tone for the weeks ahead. Navigating this uncertain terrain would require investors to remain vigilant, carefully weighing the potential risks and opportunities.